What's up? Good morning, good afternoon, good night, wherever you're tuned in, from. Man, there's been a busy morning here. I hope everybody's doing well. Shout out to the entire community here in chat. Before we even started, I'm going to start doing some giveaways and stuff for people that are here early. So definitely try to make it here early before the live stream goes live. We're here every day, 10:30 a.m. Eastern Standard Time. Please give me a thumbs up. Give me your favorite emoji. Type in a funny word, anything. Let me know that all the video audio is good. Again, my name is Kelly Kellum. Welcome to the BitLab Academy daily live stream. That's my Twitter handle. Follow me on my socials. And also, please hit that like button, hit that subscribe button, ting that bell. It really helps us out. And of course, check out all the socials we have right there, and make your way over to bitlabacademy.com. Sign up for the newsletter. You get entered to win free month access to the courses and a free month access to the BitLab trading stack. So shout out to everybody that's already a member within the BitLab community, not only here on the daily live streams, but also in the Academy week. And I've said this over and over again, we have so much coming to BitLab Academy. I'm coming in here at 7 a.m. Well, you all know I live in New York, but I'm down here in Atlanta hustling away, trying to bring all these new things to you. But you know what? We're not going to do as long as intros as we have been. I'm going to try to keep it to about a minute or two, and we're going to jump right in, and we can talk about other things as we go along. So shout out to everybody. Are you DCAing? Are you not? Did you get some entries? Did you take some shorts? What have you been doing in the last 24 hours with what's happening in the market? Let me know. Type it here in chat. If you're watching later, type it in the chat in the comments below, and let us know whether you're watching here on the BitLab Academy YouTube stream, or if you're watching anywhere else, a Hit Network 24/7 stream, whatever it is. Please make sure that you hit that like button, hit that subscribe, and if you're watching anywhere else, you come over to the BitLab Academy. So this is a BitLab Academy page. It is youtube.com/@BitLab Academy. Come check it out. Come over here to the live playlist. Come down to, come over to playlist. Come down to the view full playlist and check out some of these things, especially if you're a newbie, especially even if you're a pro. There's some really great hacks and some tips and tricks that you can master your trading view and do it very effectively. So with that being said, did anybody panic sell? Did anybody panic sell the drop? And what I mean by panic sell is not take a short before the drop happened, because that means that you were prepared and you had a strategy in place. Did anybody see red candles and then sell into those red candles because you were fearful? Okay. Well, we got to talk about that. Well, what we want to do today is we're going to be talking about the crash that has ensued on the markets. And we're looking right here. Let's go ahead. Let's go out to our macro view. And we could see, I'm going to hide all the stuff on the chart. All we're going to look at here is the BitLab trading stack. We're seeing our divergences. We see this macro downtrend. We see the EMA ribbon that had flipped. We've pushed back above it. We're making some attempt to flip the EMA ribbon. But what's going to happen here? Well, we're going to talk about that. Was there some leading signals? We talked about a lot of stuff yesterday with on-chain metrics, as well as larger players in the market not really sort of believing in the move and that believing in this impulse pump that we had to the upside. And it makes a lot of sense. We're getting this rollover. Also, look at what Paul called this perfectly, the BitLab trading stack, which includes the BitLab market intelligence, hidden volume, relative extreme, significant movement. This indicator alone, this BitLab market intelligence, combines 9 different indicators. It reads divergences across so many different stuff, so you don't have to have it all on your screen to find those divergences. It's calling them out. If I double click on this, come here to full, we could see these, look at this. We had RSI and stochastic divergence right here at the top of this before it rolled over. And here we had RSI and momentum divergences. Let's see if there's more. And money flow index called perfectly on the bottom. This is such an incredible indicator. If you haven't yet, make sure you go over to bitlabacademy.com, click on indicators, check it out. Use coupon code RELAUNCH 15 for 15% off your first month. And of course, get inside BitLab Academy. If you haven't yet, get in there, because we have all these updates coming. And with the updates, after these updates roll out, we're increasing the price a little bit, because there's so much more stuff that we're offering, and it's still an incredible deal because you get access to our premium Discord. A lot of Discords out there are $45, $55, $79 a month. you get BitLab Academy, access to all the courses, old and new, all future courses as well as access to that premium Discord. So definitely get in there. And then you can also use Relaunch 15 for that. But I would just want to shout out here on BitLab Market Intelligence, look how perfectly this is calling it. We also had the upside preceded by this bullish divergence here on the hidden volume. Great leading indicator. And then are we going to roll over? Well, we're seeing this extreme movement on the relative extrema, showing that this was an overheated move. And what do we get? We get a rollover as soon as we get divergences. So this is such an incredible tool. I really want to encourage you all to check this out. Really has helped me, because each one of these, even the relative extrema and significant movement, these each combined 3 or 4 different indicators within them as well. Stochastics, MACD, RSI, just buying pressure, all the things that you would need to look at to really get those clear signals. But was this move, here's the question, was this move specifically due to the SEC coming out and just being complete jackasses like they are, and having no clue about how to build the relevance of the U.S. economy? Let us be participating in one of the biggest technological advancements of our time, which is blockchain, integrating some of the most disruptive sort of technology and supporting that, through blockchain. But no, SEC is coming out saying, they're basically retroactively coming out and saying that there's issue with staking. And essentially what they're doing is just complete ignorance. And we don't want to see that. We want to be able to navigate this market. But despite the SEC saying these things, look at where this RSI divergence, stochastic divergences are, and the relative extrema. This was all preceding. This was before the SEC came out with that comment. So this was already in the charts. That just added fuel to the bears to come to the downside. And what have we been talking about? What have we been talking about for the last few days, the last week or so, is that we're in this macro downtrend. If we come back on, turn on our lines here, it's a lot of lines, but we have this macro downtrend, falling wedge. We've broken out. Now look at this. This is starting to look really nice here. I'm actually going to delete this line here so it clears it up just a little bit. I'm going to delete this Fibonacci. And what we can see here, this is looking, for me, this is looking incredibly bullish. Why do I say that? Well, we've been talking about this. If this is your first time on the channel or not, or 100th time, we have to remember that every pullback isn't a bearish signal in the market. A pullback can be signaling healthy movement so long as the resistance that we've broken through flips to support, meaning this bounces anywhere in this region and continues to the upside. But before we continue on in these charts, we're going to jump right into a couple other sort of charts and sort of considerations that we might want to look at. So the SEC came out, and this was specifically targeted at crypto. But if we come over here and we look at Caleb Friends, and follow him if you haven't, wonderful, wonderful analyst and just brilliant guy in the market. We're looking here at Tesla. This has nothing to do with crypto. Of course, Elon Musk and Tesla hold some crypto on their balance sheet, but the asset itself isn't tied to, the ups and downs of crypto. But what we can see here is we fell through this massive support. And what we've done, look at this. We've tested this as resistance, Huge push down by the bears. Bulls brought it all the way back up. And we basically got rejected directly at where this previous support was, resistance once again. And we've broken through this other trend line that we've created right here. We're slicing right through it. And we can see that because he posted this at 10 a.m. Now, if we look at the next chart, what happened? I'm going to go back over here. Going to come down. There was 2 charts. I don't know what happened to the second one. Continue. There we go. And we can see that it lost this level. I guess this is the same chart. I must have deleted the other one. It's all good. But it's slicing through this level. It's actually getting rejected here. Very bearish. And why am I bringing this up when I'm more interested in Bitcoin and crypto and what's happening there? Well, when we look at these massive tech stocks within the traditional finance, this gives us also a clue as to what the broader investor is considering about risk on, risk off, about technology investments. You have to really understand that Bitcoin and crypto are I mean, bar none, a massive sort of technology investment play. And they're very risk on based on the nature of, the age of them, the size of the market caps, the experimental quality of a lot of these things, I don't mean Bitcoin, but a lot of the other crypto assets out there not having really proven what their intrinsic value is yet, because a lot of them don't even have their full use cases defined and proven yet. So there's crypto markets are very risk on. And if we look at these less risky considered assets like Tesla, we're seeing rejections at key levels. Of course, we had this massive bullish push, but we're getting rejection. So we can also consider, forget about the SEC, when we're just looking at the charts, we can see that the risk off narrative is still sort of being battled here. This risk on appetite is finding resistance. So look at this as the risk appetite coming back into the market, now finding resistance, and now we're going back to risk off. Potentially, this very well could reverse and come to the upside, but as we're seeing right now, we're seeing resistance for risk assets. Now, coming over, delete this, coming over here, looking at this account, this post from Game of Trades underscores, where you can find them out. Excellent chart here, but we're seeing a massive divergence forming here. And what is this divergence in? Well, let's look. Challenger U.S. Job cuts announcements versus initial jobless claims. So jobless claims is this dark blue line, and it's still falling while the announcement of U.S. job cuts is still rising. So what's going to happen, this blue line is lagging in a sense from the job cuts that are being announced. So as we see jobless claims start to rise here, in the coming, 6 to 8 weeks into the next, basically throughout this quarter into the next quarter, we will see the jobless claims start to move to the upside. We're seeing, you can call this a bearish divergence here, because what happens is when we start getting a large increase in jobless claims, on the one hand, it might be good for what's happening in the talking points and the considerations from Chair Powell, Jerome Powell, the chairman of the Fed, which could increase the probability of a pivot. However, what it also leads to, what it also means, is that if we're starting to have a lot more jobless people within our economy, then that also will then that will lag behind. Then there will be lagging data that shows likely there's going to be less liquidity in the markets because there's going to be more people out of work. So all of these things are tied together. I could speak. Now, all these things are tied together when we are trying to address really what the number one question is when we're looking at Bitcoin and crypto. Is risk coming back into the market? Is the appetite for risky assets coming back? Is there data showing that that the risk-off mentality is going to persist into the future? Or is this something that is going to is a risk-off appetite not going to drive markets? And right now, as you all know, the economic sort of landscape that everything is riding on right now has no real data to analyze, to really prove really useful sort of hypothesis and create valid sort of theses around. Now we have to do that because that's the only way we can interact with the market. But we have to understand we've never had a global economic shutdown, especially since we've had globalization. But I mean, I don't even think in the year of the Spanish flu back in I think 1912 or whenever it was, I don't think there was a global economic shutdown at that point, because life had to move on because things weren't automated. Things weren't, life just kept on going. And now we have a global economic shutdown. From that, we have the supply chain issues that were incredibly difficult for markets and suppliers and businesses to navigate, which caused necessary sort of, we want to think it's unnecessary, but necessary and correlated inflation. Because what is everything about Bitcoin? Why is it so inspiring to us? Because we can understand the supply and demand dynamics. We don't have a full picture on demand, but through on-chain data, we can see at a much more real-time pace than looking at profit and loss reports from traditional assets. With Bitcoin, we understand the supply is engineered into the code for that blockchain. And similarly now with Ethereum, we're seeing a lot of token burning going on with Ethereum. And now that's a bit, it's deflationary for the time being. And so understanding the supply dynamics gives us a lot of sort of incentive to want to participate in these assets, these crypto assets. So why is this relevant? When we're looking at jobless claims and we're thinking about supply chain issues and we think about inflation, the problem with this is we can look back at what's going on with historically when we had inflation and when we had jobless claims, but we also didn't have those following a global economic shutdown. So is inflation going to be transitory? Is it going to be entrenched? These are things that we don't yet fully know. And so this is why the market is seeing this risk come back in. And then it's like, well, no, but look at this data, and risk comes back out, and we're juggling all this data and trying to remain adaptable in the market so that we can consistently, profitably, over time, find our trade entries and trade exits, or our investment entries and investment exits. And it all comes down to what your strategy is, what your mindset is, and how patient you can be to let those opportunities come to you versus forcing them. Now, there are a lot more, there are skilled traders out there that are actively diving into these markets, and they're scalp trading, meaning instead of looking here on the weekly, they're coming down in here to the 30-minute, let's go auto, coming in here to the 30-minute, finding a range and trading this bounce up to this high, down to this bounce, up to this high. But this is for a much more advanced trader, because you have to be on your game, sitting at your trading desk and really looking what's happening in the market in real time to really navigate that profitably. Not only that, when you're looking at all this data, when we're zooming in, we say we're trying to trade this range right here. Well, you not only need to understand, how to range trade, but you also need to be able to break it down in that 3-cycle strategy that I've talked about here over and over again, that macro, midterm, micro. Now, in the same vein, even if you're scalp trading, your macro, for instance, if you're range trading, on the 3-minute candle, your macro could be a daily or 12-hour chart to give you the landscape of, okay, we're in this downtrend, okay? Now, let's zoom in down to the 4-hour. Now, okay, we're still in this midterm trend. We're definitely in a downtrend as well. And in addition to that, we're well below the EMA ribbon. Now, we can go down to the micro, go down to the 1 hour, come down to the 15 minutes, and really identify where these ranges are and where the reversals are on supports and resistance of this range. And the only way to do that is not only by coming in here. We could turn off the BitLab Market Intelligence. Not only coming in here and doing option J for defining a range, and this is actually looking more like a broadening wedge. Maybe not. Let's kind of do this right here. So we have a range, but you're not just going to trade the second we get near this. You want to pay attention as to what the candle structure is on whether it's Bitcoin, Ethereum, Cardano, Tezos, XLM, Atom, it doesn't matter. Oil, any asset you're trading, you're looking at the candle patterns on the chart to understand, no matter whether it's the larger time frame or smaller time frame, you can understand the psychology of the market and when it's likely you're going to get a trend reversal, not just because you're at a resistance line, but you're looking for certain candle structures that are identifying also, yes, it's starting to look like momentum is going to roll over, because we have the evening star doji right here. We have another evening star doji right here. So we're seeing the start of the definition of this resistance level. And similarly, we come down here, the bulls eat it back up. We come over here, we get this large sort of hammer candle, not quite because the body's quite large, but understanding the dynamics of what's happening on the chart, understanding the dynamics of what's happening within the candle structure, and then pulling up your indicators and fine tuning exactly how you want to play that. So, as I pointed out earlier, we had the massive news that came out, not massive, actually, I'll call it a little bit of a dud of news that came out from the SEC yesterday. Everybody was hoping it was going to be XRP. And of course it came out and it was, the news story was more related to banning staking and charging Kraken for selling unregistered securities and all these sorts of things. The interesting thing, though, is that they haven't yet come after Coinbase. And as George called out from Cryptos R Us, he made a great point. Coinbase has an army of very well-funded lawyers, well-compensated. They have a proper legal team that really could be an adversary for the SEC, whereas Kraken is a much smaller exchange. Excuse me, where my nose is itching. Kraken is a much smaller exchange. They have a lot less money to put behind the legal war that would ensue going to battle with the SEC, because they're able to draw it out as long as they want. Look at how long the XRP case has been going on. So I think ultimately, I don't know if it's going to be immediate or in the future, whatever it is. I do think that ultimately the what was I trying to say? I do think that ultimately the staking decision from the SEC will likely be challenged and not withstand. But we need to be aware of all this data. We need to be aware of all this news, and then be able to come in here to the charts and have the news on our radar. So we, big press conferences coming up from the FOMC meetings, the CPI, all this stuff is hot button issues right now, because the market is sitting sort of on a cliff. Are we about to explode into a bull market? Are we about to continue breaking down? And understanding the technical analysis of the charts and reading these candle patterns and seeing this range that is here that now is broken, which is signaling continuation to the downside, we can utilize our technical analysis skills and our awareness of not only the price action, but also pulling up whether you're using the stock indicators like MACD, stochastics, RSI, and all these sorts of indicators. The money flow, the volume. And look at this. I'm actually going to zoom out on this a bit. I'm going to go to the 2 hour, and I want to see. Okay, so you see we're falling. Once we lost this level, this volume level, which we can see denoted here on the VPVR here on the right. Once we lose this level, price, I got to zoom out there. Once we lose this level, we have a big gap here, and we're falling right through that gap. These gaps tend to be areas that price rockets through. Look at this right here. Price rocketing through. I'm going to make this a little bit larger. Price rocketing through this low volume gap right here. Price likely going to rocket through this low volume gap. Now, our next floor is right where I was denoting over the last week, time and time again. I'm going to double click on my chart to minimize my other indicators. And this is exactly where I was calling for a pullback to come to. And this is right at that 21,002 to 21,004 level, because there's a volume gap right here that then the next shelf of volume where volume was traded, and we can tell the volume was traded here because there's a lot of price candle interaction on these levels. If you don't know how to read the VPVR, the simplest way I can put it, this is the volume profile of the visual range. So everything you can see on your chart, as you see as I zoom in, this will change. You see this? It's anything that is currently viewed on the chart. This is showing how much volume. So if this is coming out further to the right, that means there's a lot of volume traded specifically on this price point right here. And right here, we can see there's very little volume. And look at this coming across one candle, two candles. There's only two candles of volume. So there's no interest at these specific price levels. And this is something that further supports when you're looking for support and resistance of where the price may find resistance at when it's moving to the upside, or where price may find support at when it's moving to the downside. And why is that? Well, we're having a lot of volume that's traded at this level, but in addition to the volume traded at that level, we can also see there's established resistance, as we can see from this trend line here. This was previous price action top, and that's what this line was. Let's get it back down. There we go. This is right where we're finding resistance on this sort of pattern right here. And then similarly, we broke through it. And then over here, likely there's a lot of volume here. And then also from before, where we can see this line was a previous price action top. So there's a very likely sort of, at least minimally, a stopping point right about this level at the 21,400, 21.4 level. And we have a lot of volume below this. So any sort of finding an entry at any sort of level between $21,400 all the way down to, I mean, really, I'd like to see it come down to the 19.7, 19.6 level. But anywhere in this region, finding a reversal is going to be incredibly bullish for Bitcoin. So where are we standing today? Let's see. Are we going to continue to fall? That's what everybody wants to know. Are we going to continue to fall? Well, the first thing I want you to notice is that the red, yellow, purple, orange is the order I have these the 4MA on. I think this is a 200, 100, 50, 20, I believe is how mine is set up. Either way, this fastest moving average and then the slowest moving average. Once you see these starting to flip, and in this case, look at this. This ribbon, these moving averages have completely flipped over. Red, yellow, purple, orange, and look at this. Orange, purple, yellow, red. So this is fairly bearish looking at this, and I'm looking here on the 2-hour time frame, and this is looking like what does this look like? This looks like a push pause continuation, which is essentially how markets move in both directions. That's when you get a push, a pause, whether it's sideways or a retrace up, and then a continuation. We get the stair step. We get the stair step sort of function in price where it pushes down, cools off, pushes down, cools off. Now, where have we seen this before? Let's come over here, back over to my Twitter. If you haven't yet, definitely come over here, give me a follow. I share all kind of stuff here. I'd love to. You're welcome to reach out to me. I try to connect with as many people as possible, time permitting. But this is what I wanted to show here. Come back down here. This chart that I show because it's relevant on everything. This is that push, relax, push, relief, push, relief. This is what we're looking for. Same thing here. We have a push up, relief, push, relief. And as on these relief, whether it's sideways price action or actually retrace up, then this is how we establish this trend line. So what we're looking at right now on the price action is that this is, this was sort of forecasted as we came up, and this is starting to roll over as we're getting basically single top, double top, triple top, and then rejection to the downside. And in addition to that, I'm going to move this trend line we have right here. We have a trend line here that once we came back up into it, rejection to the downside. And so where we're at right now, let's go ahead and zoom this out, pull this up, and this level that we've gotten right here, we're sitting right above the most bullish thing that can happen in Bitcoin right now, which is finding support anywhere. Finding support anywhere in this region, finding support, and then resolving to the upside without getting rejected. If this does break through, without getting rejected to this. Now, of course, the most bullish thing that could happen is for price action to come down. Let's find my path. It's for price action to come down and then bounce off that to the upside. But Bitcoin and crypto markets like to shake people out as much as possible. So you need to be prepared and don't just panic sell just because it doesn't hold here. You need to be prepared for the price action to find some support and then break through. And then after it breaks through and commits people to going short, you have market makers and institutional traders trying to commit you to your fear. They want you to trade in fear because it's irrational and you're trading on emotion. They are trying to get you emotional. If they break through this level, it's going to be interesting to see where the bulls come in. And then from there, then come to the upside. Actually, what I think they would actually do, if they do break down, is then come to the upside, find a bit of a rejection, get people committed again, showing them, oh, we are committing to this being a downside price action, and then rocketing to the upside and shaking people out both directions. And I don't want that to happen to you. I don't want it to happen to you. So just know you need to be prepared and have your strategy in place. If we do lose this level, that you know that there's still price action within this level that is bullish. Anywhere from this 21.4 all the way down, I would argue down to about the $19,600 level. Now, we're going to go through some other coins and talk about how some of the signals that we could watch about what's happening on here. I hope you've all smashed. Yeah. Oh yeah. Shout out to everybody in chat. Shout out to all my my friends and my mods and people that have been following me around and being with me. I don't want to say following, being with me through my journey here on YouTube the last 2 or 3 years. Of course, I started this channel. We started this channel here, Hit Network, about 2 weeks ago, 2.5 weeks ago. So we are flying here. Please hit that like button. It's the easiest way you can help us out. Hit that subscribe button, ding that bell. And go over and head to follow me on Twitter at my handle. And shout out to all the people here: Brad Geidel, Alex Green, King Peasant, Alexander G, Crimson Caravan Company. Oh man, so many people. Mitch Shaw, Brad Geidel. I think I already said it. Matt C. There's so many people in here. And just shout out to everybody. We built such a nice community so quickly here. So continuing on to the charts. I do want to shout out some of the. I don't want the 100 and below market cap sort of coins. Send me some of the coins that you've been looking at in the top 50. Things that, and we can do some charts on those, and we're going to look at some of the signals that could have indicated that this move was coming in, despite the news from SEC. Now, one of the things I also wanted to shout out here is, what does this kind of loosely look like? 1, 2, 3, 4, 5. You know what this looks like to me? And this is how we knew it was rolling over. One, we're getting the highs are starting to roll over, but this one right here, where we're getting our first lower high, this is if you were playing to the downside, this is where you really short. Because if you come back here, let's go to the three day. Let's look at this. 1, 2, 3, 4, 5. These patterns chart back on. My knuckle keeps hitting this. These patterns play out over and over. These patterns play out over and over on the charts. Charts back up. My bad, guys. My knuckle always hits this because I'm on a limited size desk here. So what we're looking at here, if we come back to the 2 hour, we can see 1, 2, 3, 4, 5. Now this chart. Once you recognize charts that play out, you can see this 1, 2, 3, 4, 5. And short, I mean, massive downside price action. So we knew this was coming over by understanding what's going on with the charts and knowing how patterns have played out over time on the charts. And you always need to protect yourself and throw in healthy risk management. If you're entering a trade, I always want to suggest to make sure, if you were going to take a trade here, that you come over here onto this left bar, hit this little arrow, and put these in your favorites, and then when you come down here and click on this star, then you get your bar right here. I just realized that my screen was a little fat today. I have to adjust this every day. We can see right here, we get this bar that is all of our favorites on it. Everything here that you put your star on, once you click on this star here, then you have all of those tools very easy to access. And this is in addition to all those quick keys that I tell you about, which we'll continue doing on every stream here. But come here to if you're going to do a short, make sure you come in here and you measure what your risk is. Say you're waiting for price to come back up into this level. You can select there, pull this down. Try, especially if you have any leverage, I would recommend having very, very tight stops, because you're going to have exponential losses. If you have a 5x trade and you're trying to do a 5x short, then 1% is a 5% loss. So 0.3 would be a 1.5% loss. And we can see right here, this didn't break through. So this would be sort of a healthy sort of setup. And then you can have your first target be where the lows are right here, which would be a pretty substantial gain there. That's in terms of the ratio, risk to reward 9.5, very healthy trade. And you could take some off the table here. You'd be in profit, move your stop loss down to where your previous high is about here, and then you have your targets identified along the way, along the way of where you are going to ladder out the rest of your exits on this trade. So that's how you profitably play this. You identify your trend line as soon as you have 2 points, and then you wait for it. You say, okay, I'm waiting for a short because I did not take advantage of these. I'm waiting for this to push back up into this resistance zone. I'm going to take a short if the conditions are right. Now let's turn back on. Let's come over here to our BitLab Market Intelligence. Let's let it load. There we go. So look at this. Right where we would have taken this trade, we have two bearish divergences, which is this flag to the upside. We have a MACD divergence, bearish, and a bearish RSI divergence. In addition to that, we had a bearish hidden volume divergence leading this into this move, and we're coming up into a zone of resistance. And then on top of all of this, we have a local top sort of flag right here saying the MACD, stochastics, and other momentum signals, RSI, are very overheated, and it's likely going to have a cool off or pullback soon. So this was leading that move up into this resistance. So we're already overheated as we're moving up into the resistance. Then we get the MACD and the RSI bearish divergences. That's where you take a smart entry, because you have your confluence between multiple signals and your candle your candle patterns. And we know it's from the candle patterns we can see we have a bullish, very strong bullish candle here. Then we have a shooting star with this. I'm going to delete this boom right there, which is this. Basically, it looks like an inverted hammer, but inverted hammers at their bottom of trends. When you have this sort of inverted hammer looking candle at a top of a trend, this is called a shooting star. And this is saying that the bulls really tried to push it and the bears said, no, we are dominating this narrative. And they come back down and you have this long wick and it ends up being a bearish candle. And then as soon as the next candle opens and we break below that low, you have your full conservative safe entry of that short with your stop loss in place. That is the way I look at these markets when I'm trying to find an entry or an exit. Now, where we're at right now, are we going to continue down? Well, look at this. We are trying as hard as we can. Let's come down to the 24-minute. Let's actually go to the smaller. Let's go 15-minute. Let's go 5-minute. I'm going to type in 5M. No, it's no, just 5 minutes. So this is what we're looking at here. Now, this is interesting. What do we always look for when we're trying to find a bottom, a top, a rebound? Well, first off, let's do Option F. If you're on PC, that's Alt, Option F. Now, click at the top. Now, go to the bottom here. The bottom is right there at the bottom of this wick. Now, we could go all the way up to this golden pocket. And it looks like the bulls already made that attempt, and they got rejected. So they got rejected before the golden pocket. But what am I really seeing here? I'm seeing the candles extending into bearish momentum. Really, bears really taking over on these candles here. This is on the 5-minute candles. Now they push way down. The bulls ate this candle back up. The bears tried to attempt again, way down. Now we get 4 divergences, bullish divergences here. A lot of buying power coming in. We have a little bit of a trend floor forming here with this blue wave, which was signaling this. This coupled with this will give you indication that to definitely take profits if you had a short here, take some profits. But the other thing we have to be aware of is the pattern and support and resistance on the chart, because we are pushing down, but then as we're rebounding up, we're finding resistance. We got rejected below the golden pocket here. In addition to being rejected at the golden pocket, now as we're pushing up, we're finding resistance right on previous lows of this range. So this is exactly what we're looking for when we're looking for confirmations, is a breakthrough, a retrace back up to test that previous support as resistance, and then the confirmation to the downside. This is exactly what we're seeing happen right here. A breakthrough, a push back up. Now look at this. The bulls and the bears are really fighting a battle. That's what each one of these candlestick represents. If it's a red candlestick, the bears are winning that battle. If it's a green candlestick, it means the bulls are winning that battle in that session time period. So each candle in this case is a 5-minute candle. So this is a 5-minute session, 5-minute session, 5-minute session. That's how you need to think about this. And so when you go to larger time frames, those are larger trading sessions. Now, if we actually zoom in a little bit closer, look at this. There's just a lot of rejection here. Come back down, find support on the 382 fib. So this could kind of go either way right here. The bulls are really trying to make an attempt. It's in favor of the bears, however, because if we look at the hourly candle, actually, let's go back to the 24-minute candle. We have let's go to the 15. We have established a bit of a downtrend, and all this is right now, until proven otherwise, is an attempted relief within this. Now, when we come back down to that smaller time frame and look at this, we do see. It's almost, we can even go down to the 1 minute to see We have a bit of a ascending triangle here. As we can see right here, option T gives you a trend line, or alt T. Now, this is a bearish structure within a bearish structure. We are under the EMA ribbon, even on all these time frames we've looked at. We're under this EMA ribbon. We have an attempted rally to the upside, a relief rally, and within this structure that is relief is the bulls trying. And they get rejected. The bulls trying, and they have less momentum each time with these smaller movements. So now we're looking for a breakout to the downside unless we get a major move to the upside. In this case, look at this. We have a red wave here on the BitLab significant movement, which is saying this is already overheated, and we haven't even broken this high right before it. This is already overheated. We saw the extrema right here showing this move was not a healthy move, and on the next attempt at that level, we can't break through it. So now what I'm looking for is some form of bearish bearish divergences start to flag out here above this. And especially my favorite divergence is to watch the hidden volume. This is my favorite part of this indicator system because it is it's so powerful to watch what's happening with volume in the market, because it gives you a good indication of where the confidence is. If you're getting bearish divergence on volume with a very weak push up, that's my strongest signal that I read on the BitLab trading stack. And then utilizing what's happening with the extrema and significant movement, and then the RSI and MACD and all these other 9 divergences that this reads. So we're seeing weakness here. We're rolling over. Of course, this is on the 1 minute chart. But if we come back out to the 24 minute, it's the same thing. We're still seeing this weakness. So I am expecting a continuation to the downside unless we get some other incredible news like, oh, Gary Gensler was just joking. We're not going to ban staking. That's not going to happen because he is an idiot. But let's do some other coins. Let's talk about other things in the market. We definitely need to look at Ethereum. Because of course Ethereum has it's the largest ecosystem outside of Bitcoin, and in reality, it's a larger in that there's so much of the crypto universe, so much of the crypto ecosystem is built on top as layer 2s and layer 3s on top of the Ethereum blockchain, and so with this sort of speculation and poor decision making from Gary Gensler and the SEC. We need to look at what's happening here on Ethereum, and it's mimicking a bit of what Bitcoin is doing. So let's immediately do option F. Click here at the top. This is always just a little bit too a big old wick. Yo, man, you got a big wick. All right, now bring this down all the way to here. Now look at this. Price action rolled over, pushed all the way down. Bulls ate this liquidity up. Now, the bulls are making another attempt, and in this first attempt here on the 24-minute candle, they're getting rejected at the golden pocket. It's amazing how effective these golden pockets are in understanding where the market is going. I really want you to explore using them. When you're trying to find where a bounce is going to retrace from, you go from that sort of that local move, the top of this local move. Okay, we're going to do this again. The top of this local move, and if you don't want to use quick keys, go from the top of this local move, come over here on the third tool option down, select this little side arrow, make sure you come to fib retracement, and then you click on your chart right at the top of right here at the top of this wick. Now you only click once, you don't need to hold, and then you come down until this meets the very bottom of this wick, and then you click on the chart and it's set. Now yours might look very different from mine. That's okay. I just have mine set up custom. I change the colors, I change the colors and what it looks like, and I turn off the background and all this kind of stuff. And I just have mine set at 0, the 382, the 618, and 65. You have to add this. You can change one of these and just add 0.65. This is your golden pocket. That's what you're seeing right here. That's why they're so. This is the golden pocket. And then I like to have a 1 and a 786. We can talk about this later in another stream. This is for fib extensions, for setting higher price targets. But doing that cuts out all the noise and all the color. It's easier to see on the chart, and dragging it from the top to the bottom gives you the likely retrace. And look at this rejection. And now look how bearish this is. We're on a 15-minute candle. This is going to be a very bearish candle. This was somewhat bullish with this basically hammer candle that we have here, but now this is being immediately followed by a bearish candle if this were to close anything like this, because we got rejected at this golden pocket. So we're not seeing a full trend reversal likely yet on Ethereum. If we come down to smaller time frames, we can even see this play out in more clarity. You see how we can use different time frames. This is just a large bearish candle with inverted hammer candle. Okay, now if we come down to the 15-minute candles, it breaks it up over more periods of time because there's more candles over that period of time. Now, if we break this down even further, down to that 3-minute candle, now we can see the resolution within these two candles. Within all three of these candles, this is broken up into 3-minute periods. So now we can see what is the interaction here. So the candles are rolling over, coming all the way down. This attempt is trying to come up, but now we're getting a bit of a rejection here under the EMA ribbon cloud. And this is how you're getting that resolution on the charts. So this is looking to me like a likely continuation to the downside. And without me having to even set a target, I can see I have this macro trend line that is right below us. I'm looking at a target somewhere around 1485. Yeah, I'm looking at a target down around 1485 for this move, and laddering your entries and exits along the way. I'm going to take a breather for just 1 second. How's everybody feeling? You know what? Somebody says, let's see, Stein Calderson says he has a question. What is the question? So here's a reason I don't check chat much, because I'm in here by myself, and I'm running a bunch of different things, and it's very difficult for me to follow along with chat while I'm trying to get through as much stuff as I want to. Can you guys just put in what Stein's question was, and I'll try and answer it. I can't see it. Just let me know. What is the hit rate of the golden pocket? The hit rate of the golden pocket is fairly high. It's among the highest of a lot of the different patterns and strategies that we see within, when you're building structures, whether it be descending wedges or broadening wedges or descending triangles. The hit rate of the golden pocket is, I would say somewhere in the 80-ish% range, 82% range, somewhere in there. So yeah, I use it on every move, and I like to use them on a macro, a midterm, and then on the very smaller time frames on that particular move. You can really see where you can really snipe in on your entries or exits. Now I see Stein, all good. What's the difference in the hidden volume and the blue-white color changes? What's the significance? So let's pull this up. So the hidden volume, this is just tracking over. This is essentially we're seeing moves to the up or downside, but it's kind of, I don't want to say it's irrelevant. You can sort of track this by just looking at this coming across. But one of the things you can do is you can also come over here to style. If you don't like the blocky nature of it, you can come over here. You can do line, for instance, and just have it like this. But the blue lines, from my recollection, tend to be bullish pressure coming in the market, and the blue are bearish. But this isn't going to really give you signal on the charts. What's most relevant here is looking for these R and H's. The R is regular, H is hidden, and you want to see them above, which is bearish, or below, which is bullish. This is what you want to see on your chart, and utilizing these along with your other indicators will really give you clarity. And for instance, right here, this was a very undefined move because we have bearish hidden volume divergence while we have a bullish sort of setup on the extrema, and a gray area here on a significant movement. So what this is demonstrating, when you see this sort of conflicting signals, sometimes you want to have conflicting signals, because if you're having a bunch of conflicting signals, that's an indication that maybe this is a trade that isn't a high probability move. Maybe this is something that you should sit out, because sometimes the best trade is no trade at all. It really is true. You want to wait until you get a moment. You want to wait until you get a moment that has very strong sort of combination of multiple indicators on one that gives you that proof of the move, that signals, for instance, right here, we have three our three divergences here on Ethereum right at this peak. We didn't get a bearish divergence here on the hidden volume, but we did have these things were kind of sticking out a little bit, and we had the local trend top right here on the significant movement. But in addition to this, we have to remember we have other indicators that are naturally just a part of price action, and one of those right here is this sort of stiff resistance that we're coming into from previous price action tops, and coming into this resistance while also having bearish divergences and showing a trend cycle top. This is where you start building your confluence between. I like to have a 1, 2, 3 confirmation where, you know, let's say if I'm in any given time, you could be seeing 7 different signals on the chart, from price action, from momentum, from support and resistance, from volume. All of these things really indicate. In addition to all this, not even using the hidden volume, we can see the price action being pushed up, coming into resistance while the volume is actually falling down. This means that the bulls that are there might be pushing it up because the bears are starting to just not be exuberant. There's not a lot of pressure to the downside, but there's not a lot of volume from the bulls either. That is proof of that move. So lack of volume going in the uptrend while we're also having bearish divergences, while we're also showing overheated symbols on MACD, stochastics, other buying, RSI, buying pressure. That's what this is some of the things that the significant movement is reading. And when we're seeing the confluence of lack of interest with also increasing sort of indication of likely downside, then we can take that move more confidently. Okay, now, most important is money flow is very important, and we see that you know, just so anybody that doesn't realize it, here on the BitLab Market Intelligence, I'm going to go to full here. We can see right here this indicator just by having it, you don't have to have money flow up, because this reads money flow index. This also reads Chaikin money flow. So you get 2 different money flows that's showing you on the BitLab Market Intelligence. We get, for instance, right here, CMF, that's Chaikin money flow. We can actually see that more clearly. Actually, that's as clear as it gets. The Chaikin money flow is CMF. When you see MFI is money flow index. So you can see when you're having bearish or bullish divergences, in addition to momentum, MACD, relative strength, the on-balance volume, extrema, there's stochastics, there's all this stuff is included in that. And that's just market intelligence. Then significant movement also gives a wide perspective, aggregating data from stochastics, momentum, RSI. So when you're getting multiple different indicators that are all showing that they're hitting the overheated level, then that and it's beyond the norm of the moving average, that's when you get the signal flash that you're likely hitting a trend top. Boom. See red, top, red, top. Now, blue is starting to form that base, but this did fall through, but we're in a downtrend. So you have to use these things in context of what trend you're in. That is how you use either the BitLab trading stack or any other indicator package, or whether it's a stock package built into TradingView or MarketSight or anything. You have to look at the signals that an indicator system is providing you, read them in the context of what the broader market is looking like at the time. Otherwise, you're doing ineffective technical analysis because you're trying to confirm a bias. And the first thing you want to do, if you do have a bias, try to disprove the move. And if there's more data that's suggesting that your move is correct than not correct, then that's when you identify what your targets are, what your strategy is. You know, having everything in place when you're entering that position, because you've already tried to disprove it, and you're seeing a confluence of stuff supporting the decisions you're trying to make. Now, in addition to all this, what I want you to do is, even if you're seeing the proof of the move with all the indications to the downside, you still need to look at this move and say, okay, I want this, I'm going to trade this to the downside. Yes, you have a stop loss in place when you do it, but let me map out what the probability is and the likelihood, if it is upside price action, if this does go to the upside, what's the move then? Because this way, when the market does flip and you're not expecting it to flip, and it goes the opposite direction from what your plan is, because you've already mapped this out, then you have an idea of what your strategy is going to be. So you're not floundering, just trying to make something happen because it happens unexpectedly. Now, that being said, the market it can be volatile. If you're newer in crypto, I just want to let you know, you have to be prepared for volatility, and you have to appreciate it, because the big gains that come with crypto come from volatility, but so too do the big losses. So don't jump into moves don't jump into a trade because there's big moves happening. Look at all the data available to you so you can sort of identify what those big moves are. You know, when we come over here back to the charts, we can see right here, realized profit. This is realized profits to value ratio. We could see that we're definitely in an accumulation zone, with this being down here in this green zone that is related to accumulation zones in the past, as we see here. But what I want you to notice is, look at this right here. This went deep in, pushed out, as we can see right here. This went deep in. Everybody was hoping this was going to be rebound. It reversed back to the downside and continued on sideways, but we got a deeper move down into this zone. So while as much as this would be lovely if this was the accumulation zone and we are going to just push out of it, both, look at this time and this time, we had to push into it with 2 here and then a retest. And so right here, we've pushed into this. We haven't gotten that retest. So this is where all this data comes together. This is supporting the likelihood of that continuation to the downside. Now let's do one more coin. Let's do one more coin, and then we could talk a little bit more. We haven't done AVAX lately. Let's do a little bit of AVAX. Okay, so this is similarly. Look at that. I could tell it's finding support on a golden pocket. Let's go to the 8 hour so we can see. Okay, yeah. So this is finding a retrace from this move to the upside down to, oh no, it's the 382. The 382. So the level I'd be looking at on this with the rollover, and we're getting 1, 2, 3, 4, 5. Look at that pattern playing out yet again. Now we're getting a very green wave here, but this is also following a bearish, look at this, bearish hidden volume divergence. Here on the hidden volume, we see this with this R, it's red instead of green. And this was perfectly in line with also the marking of the high here on the BitLab Market Intelligence. So this was and in addition to that, look at that. That was a perfect trade right there. And then we had this massive spike here on the relative extrema, right in line with where the bearish div on the hidden volume. This is saying likely snap to the downside. This was gray. Now we are finding some support right here on the significant movement. However, the broader context of the market is that this is more likely going to be a relief and then continuation to the downside than just a bounce and going back up. Because what am I seeing here? Why do I say that? Well, we have higher highs that then roll over to a lower high, and now we also have a lower low. So we've already established with this move that in technical analysis sense, we have established that we are reversing to a downtrend on this time frame. We can even come down to the 2 hour here. We could see this playing out, and now we got rejected for the first time at the EMA ribbon, came to the downside. We're trying to push back up into it. So let's do option F. Let's click here. Now let's drag to where the bottom of this wick is right here. And we can see that if we do get relief, to the upside, which would be, I'm going to press shift, come on, shift and click there. I'll just do this right to the upside. That would be a 7% move, 6% move from $17.80 all the way up to almost $19. And we could very well and more likely get rejected, because now we'd be pushing into the EMA ribbon, which is now showing as resistance. And we have the golden pocket right here in the middle of that EMA ribbon. In addition to that, this golden pocket, look at where this is. It's just below this level right there, which is a previous low. So this region I'd be looking at this region at $19.12, I'd be looking at $18.94, basically $19 and $19.10. This region is very stiff resistance for likely continuation of the upside. So this is what I'd be looking for if we do get a push up. But I think we'll get a weaker push up if we do, and I'm looking for more like levels. I'm going to go right here, option J, previous low. I'm looking at levels between laddering the $16.70 level and then down to the $14.90 for AVAX. Now, I just want to say, the whole point of this stream is not just for me to do TA on stream. That's why I like to talk through the concepts here. The whole goal here is to bridge that gap from beginner to pro. I want you all to have the tools that I love it that you're here, and I love it that you're finding your education online and doing everything you can to learn and grow in the space. And I want you to be able to take this, say there's no YouTube for a week, that you can identify all these things on your charts using the quick keys, using templates on your trading view, mapping out where likely price actions is going to go so that you can be a consistently profitable trader and not feel like you're just walking around in the dark. Every time you buy, the market seems to drop. Well, that means that's a good signal that you're buying hype rather than buying the data that's available to you. You want to utilize the data to inform your trades, not your emotionality, not your fear of what's happening or fear of what won't happen. You want to look at the data and take a stand and say that I have a line here. This is strong support. I see the price coming down to it. I see the momentum is starting to decrease coming down to that support level. I see a candle pattern that is suggesting a likely reversals in place. I see a bullish divergence on RSI. I see money flow coming in. This is where I'm making my entry for the bounce back to the upside. You utilize all these skills we're talking about, and you have community here in chat. Everybody here in chat, big shout out to everybody here in chat, but that's what this is about, is growing together and learning from our mistakes that we've made, the tens of thousands or hundreds of thousands that we've lost over time between, various different people, and the experience that we gain from that and how we learn not to do that again. That way you don't have to. Now, you're going to make mistakes along the way, and that's okay. The trick is to mitigate those mistakes by having risk management, by waiting for your entries, by having your entry target, like where you're going to want to enter, mapped out before it gets there. Having these plans and these strategies in place will serve you more than you can imagine within this industry. So with that, I just really want to say, please hit that like button, hit that subscribe button, ding that bell. I really appreciate everybody being here. Where do you all think it's going to be on Valentine's Day? Let me know what's your Bitcoin call, what's your Ethereum call on Valentine's Day. Are we going to have a loving day, or are we going to have an angry, frustrating day? You let me know what you think your prices are going to be on Valentine's for some of the top coins you're holding, and we'll talk about that. We'll talk about what's going to be happening in the space. Next week. So with that, I hope you all have a wonderful day, and I'll see you in the next stream. Make sure you check out bitlabacademy.com and all of these socials down here. And again, my name's Kelly Kellum. You can find me at Kelly Kellum on Twitter. I'll see you in the next video. Adios, muchachos. Adios, muchachos. Thank you for coming. Always talking trading. Adios, muchachos. Thank you for coming. Get out there. Play with a friend. Oh, yeah.